We're standing at the edge of a massive transformation. Every 80 years, society goes through what's called a fourth turning, a complete restructuring of how we live, work, and invest. And right now, we're entering an energy crisis that could reshape markets for the next decade. Today, I'm breaking down insights from Patrick Kent, portfolio manager at Hedgeye Asset Management, about why energy is the most misunderstood force in our economy and how smart investors are positioning for what's coming. Let's dive in. Here's what's happening right now in markets. Global dollar liquidity is running below nominal GDP growth, and that's creating a major problem. When liquidity tightens, something has to give. Either economic growth slows down to meet the liquidity, or assets get liquidated to free up cash. And guess what became the easiest target? Crypto. Bitcoin and other digital assets got hammered recently because they read the most liquid assets sitting on balance sheets. When investors need cash fast, crypto is the first thing they sell. Now let's zoom out. The fourth turning theory, developed by Neil Howe, suggests society goes through roughly 80-year cycles. Each turning is about 20 years, and we're now in the fourth phase, a period of crisis and transformation. Think about it. The last fourth turning was World War II and its aftermath. Before that, the Civil War. These are periods when old structures break down and new ones emerge. So what does this mean for the next 10 years? Three major themes: chronic deficits and monetization, reindustrialization, and rearmament. With aging populations, costs are moving onto government balance sheets, which will require monetization. We're bringing manufacturing back home, building massive data centers, and investing in infrastructure, all of which requires enormous amounts of energy. And the world is becoming more dangerous, so defense spending is ramping up everywhere. Here's something crucial. The Fed is cutting rates while inflation is still at 3%, not their 2% target. They've quietly moved the goalposts. This tells you everything about where we're headed. Structurally higher inflation is coming, not Volcker, double digits, but a gradual dial turning from 2% to 3 or 4%. Why? Post-COVID money was printed and sent directly to people's bank accounts. They spent it, supply chains were constrained, and inflation took off. The next wave won't be stimulus checks. It'll be energy cost-driven inflation from the massive build-out of data centers, reindustrialization, and chronic government spending. Here's what most investors are missing. We're about to hit a massive energy bottleneck. AI and data centers are creating unprecedented power demand. Think about this. If all energy companies disappeared tomorrow, there would be riots in the streets. No one could get to work. Lights would go out. The economy would crater immediately. Yet energy companies represent just 3% of most market indices. Capital without energy is just a sculpture. Labor without energy is a corpse. Nothing in our economy functions without energy. So how do you invest for this fourth turning? You need assets that can handle 3 to 4% structural inflation. This means energy and materials will be in chronic demand, so think nuclear power companies, natural gas infrastructure, and uranium miners. Rearmament is happening globally, so defense and cybersecurity are key. And focus on selective tech exposure, the companies building the picks and shovels for AI-like power systems and cooling technologies. The 40-year bond bull market is over. With structural inflation and chronic deficits, expect higher yields long-term. The fourth turning isn't just a theory, it's a framework for understanding the massive transformation ahead. We're entering a decade where energy becomes the critical constraint. Inflation becomes structural, and old assumptions about markets get destroyed. The investors who understand this, who position for energy, scarcity, and structural inflation, will thrive. Those who expect the last 40 years to continue will get crushed. If you found this valuable, hit that like button and subscribe for more deep dives into macro trends that actually matter. Drop a comment below with your thoughts on the fourth turning and how you're positioning your portfolio. Thanks for watching, and I'll see you in the next one.